Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. Hey, welcome back to Keep What You Earn. Today, I'm going to be sharing with you the simplest approach that we take to quote unquote budgeting for our clients, and something that I came up with over this past year and we've been implementing for each of our customers. And I'm going to give you the tools that you need to do this yourself. Okay. Not making you your own CFO, but you can get damn close by just understanding this core concept of budgeting. And it's actually not going to take you very long at all. It's going to be the fastest budget you've ever put together, and it's not going to be super detailed. So hear me out. This is probably like your 30-minute budget rundown of how to do this for the year, and also how to be like super prepared and organized in front of your executive team or your employees, or even in front of banks, lenders, and so on if you ever have to show projections. And by the way, yes, I'm a CFO. Yes, I'm a CPA. Yes, I have skills in this area, but I'm telling you that you don't need these skills. You just need to know your business. Like, you are actually better positioned to do this than I am in some cases, because you know where your business is going. You know what you're going to be investing in this year. And this is actually a really fun exercise to do. So here's what I'm going to challenge you to do. Listen to this, jot this down, re-listen if you need to, but I'm going to tell you, this is going to be one of the best things you can do for your business this year. And we do this every like February or so for our customers. We just implemented it, but this is part of the plan. And we've done a variation of this in the past, but this is now kind of systematized into our operating structure and our workflow. And that is, we look at this thing called a profit plan. Now, it's another word I use for budget. Budget is more commonly used, so I tend to use that word a lot just openly, but we call this a profit plan. What we do is we say, okay, for your particular business, in your particular industry, in your particular stage of life, this is probably a good margin, a good net margin, or a good profit margin, whatever you want to call it. We're talking about bottom line profit. We're talking about everything that's left over after you've paid all your company expenses and made all your revenue. So we say, what should your profit be as a percentage of your total revenue? Okay. So let's just say that answer is like 10%. I want 10% profit at the end of the day when all is said and done, to then roll over into the next year. Like, I want to be profitable by about 10%. Cool. Like 10, 15, 20, those are kind of the ballpark of where most people will lie. So we stick to that and say, okay, 10%. Then we say, okay, let's just agnostic of the sales goal, which I know is where your brain probably went first. Is like, we actually don't even touch, believe it or not, we never touch sales in this budget. Hold on. We back into a couple of things here. So one is that you should know, going into this process, you should know how much it costs you to essentially produce your product or service, to construct your offer, to fulfill your customer. And if you know how much that is, then as a percentage of your sales. So let's just say if your cost of goods, AKA the wholesale cost of what it is you do, or the manufacturing cost, or your cost of labor, whatever it is about 30% of your total price, right? So you have to go through this exercise first. You have to look at your price and dissect it to how much goes toward the cost of product. And if you're a service business like me, I look at direct labor, meaning I look at the cost of my team that serves clients, right? So I take all of my sales, I take the cost of my team that's servicing them. I'm taking all the direct software we have to use for clients, like the ingredients that go in the bowl to cook your offer. Okay. So the pure cooking of the offer, not the oven, but the cooking of the offer, the ingredients. So when you figure that out, let's just say that's like 30%. I call this fulfillment costs. So we have your total sales, and we have fulfillment costs of, say, 30%. You have the least amount of control over that number, probably, unless you're negotiating deals, or unless you're, you know, changing up salaries or something. That one's generally less, we'll say, flexible. So let's say 30% there, and then you have a 10% margin that you're shooting for. Okay, cool. There are two other categories of costs, okay? Acquisition costs and operating costs. So basically, what I'm telling you is you can group all of your costs as a business owner into three categories: fulfillment, acquisition, and operation. And what I want you to do is establish a quote unquote budget or a target percentage for each of those areas. And by doing that, what you're essentially doing is saying, hey, for every dollar that comes in, here's the percentage that goes toward each of these different initiatives in my business. And they each have a job description. And what it does is it helps you enable that profit margin to actually happen. It's very similar to the profit first mindset. I call it the profit first mindset because although I love the profit first concept, we don't implement the exact profit first strategy that Mike Michalowicz lays out in his book. But I do love the idea of starting with profit to develop your budget. So, what you want is your profit. What are your cost of goods? Cool. Let's put those in as more in ink. And then let's play with the other two. So, going back to my example, we have a 30% cost of goods. So, that means a gross profit or gross margin of 70%, right? 100% minus 30. Gross margin is 70%. And then we want to get down to 10%. So, we have 60% of sales to play with, okay, across operating and acquisitions. That's where you get to play. And that's probably where most of your time is going to be spent. Is I want you to figure out, how do I want to divide that 60% up? Is it 30-30? Maybe. Is it 40-20? Is it 15-45? You know, where is this going and where is my money best spent? Right? Which machine is going to print money faster or which machine is going to need the money sooner? And there's no wrong answer. Acquisition costs are great because there's more of that immediate ROI, but operating costs are huge because you may need to scale. May need to hire new administrative team members to free up your time. Hey there, are you on LinkedIn? I love connecting with listeners and other professionals and business owners on that platform. I got to say, I'm really enjoying it. So if we're not already connected, make sure you send me a connection request after this episode. You may need more software costs, a new website, a new CRM. For me, I'm investing this year in a CISO, a fractional CISO, an information technology firm. So we have actually outsourced IT now at Keep What You Earn, laptops, the whole shebang, like IT help desk. So that's going to go into my operating cost this year. And that's something we're investing in consciously, but I've already baked that into my quote unquote budget or my profit plan for the year. So what I want you to do is figure out based on what's coming up in 2025 for you, how much is generally going to go to these couple of buckets. And here's how I want you to approach this. I don't want you to strictly use this as a grading scale of are you doing a good job or not? I really don't. Don't judge yourself based on the results of these. These are target zones. So if you said 25% and 35%, operations acquisition, then I would say, okay, cool. That makes sense. Look at what you did last year, look at your historical numbers and add up to, okay, that's about right. That's what I want to do. And if you find yourself actually leaning more toward like a 40%, 20%, that's okay. Like, okay, that's where we're heading. Do we like that? Is it working? Should we change the target allocation? Should we revisit that? Is this what's working for us? You have to be able to listen to your business, listen to what's going on and say, hey, this is or isn't working. And I think we need to tweak the budget. On top of that, you want to be just looking at what that will entail from you in terms of, if you want to say yes to certain things, what are you willing to say no to? And this is another reason why I love this exercise is it kind of puts everything into a bucket and says, okay, if you say yes to this event or something like this trip, what are we going to say no to or not yet to? I love to say not yet. And not yet might be investing in something on the operations side. Like the new website's going to have to wait because I want to do this XYZ trip and allow you to prioritize that consciously. Or if you say, hey, I don't want to sacrifice the trip or the website, I want to say yes to both. Cool. Then you know what you're saying no to? Your profit. You're saying no to your profit. And if you're listening to this and you've never done this exercise and you find yourself with a negative or zero profit every year, you've been saying no to your profit. You've been saying no to the profit each time because by saying yes to everything else, you're saying no to yourself. So we start with the profit to say, okay, this is what you agreed you want to do. And it's perfectly okay if at a later date you go through your budget and you say, well, I want to increase acquisition spend, but I don't want to decrease operations and I can't really decrease anything else. I'm going to have to decrease profit. But you know what? That's okay as long as you're making that decision with intention. If you're being deliberate about picking the buckets you're choosing from. And That's the cool thing, is that this should have no real emotion. You're really just moving the blocks around and you're saying, okay, I'm saying yes to this and no to this. And that's okay. I'm making that decision. And it enables you to prioritize and be faced with that decision of priority, right? If you're faced with that decision to say, I must prioritize this over this, and you're ashamed of that prioritization, or you're saying, I know I shouldn't be prioritizing this, well, that's a conversation you have to have with yourself, your coach, your mentor, or whatever, and decide if that's how you want to approach it. But when it comes to taking this approach with your finances, I do think that this is one of the best things you can do as a business owner is bucket those reasons for spending. And I look at it this way. When you look at your macronutrients, I'm going into the fitness space again, but when you look at your macronutrients when you eat, I realize they're not all fuels, but bear with me. There are three ways to kind of fuel your body through calories: fats, carbs, and proteins. And if you've ever done one of those like apps, like a MyFitnessPal, or I use LifeSum, right? And you have to like hit these target macros. If you say, I'm going to eat, I don't know, 1,700 calories a day or 2,000 calories a day, and here's the split of carbs, fats, and proteins that I'm going to be eating in grams. That's basically what I'm telling you to do, is just set that pie chart of where are you consuming calories in the carbs, the fats, or the proteins. And if you kind of feel like shit after a few weeks of following this plan and you're like, I actually really don't like this, I need to turn up the carbs, turn down the fats. Okay, try that, right? That's the journey we go on when we work with a trainer or a nutritionist, is we do a little trial and error and we see, hey, I think I found my optimal mix. I think I found what's going to get me my result. But if you say, I want more carbs and more fats, well, now the overall pie chart got bigger because you're not taking away from anything else. And by not taking away from anything else, now you're going to go into a calorie surplus, not a deficit. And now you're not going to be accomplishing your goal of losing weight. So I want you to take that approach with your numbers and realize that all it is carbs, fats, and proteins. Take any association you have with this stuff, like number wise, out of the mix, and just approach it like it's fuel. These three types of fuel for my business. Where do I want to be focusing? And even better, take those buckets and, ask yourself every quarter, which of these three buckets am I going to be paying more attention to this year? So, what am I going to be focusing on in this season of my business? More of my product, more of my team and operations, or more of my acquisition and sales? And you should be doing all three all the time, but there'll be some seasons where you're just like, you know what? I really want to spend more time with my team and develop my SOPs and develop my employee handbook. Like, that's going to be the theme of this season. And if your calendar shows that and your budget, your finances show that, then that shows that you're acting in accordance with your priorities. And it's a good way to check to make sure that you're practicing what you preach. So if you say, this is important to you, I really want to focus on client acquisition this quarter, well, then I should see those acquisition costs go up, and or I should see a lot of time on your calendar being spent on those other activities. So this is what we do with our clients. We bring them through this exercise every February or so. We just did this with our clients, and we love to do this because it really sets a tone for the year, for projecting out where we're going to be, what sort of their spending, not limits, but their spending zones are, their healthy targets. And this also keeps them in check to, hey, when I deviate from this, Shannon's going to say something. And all they have to do is just explain why they're deviating from it. And we come back to the drawing board and say, do we need to change the plan? And that accountability is something that I think goes completely underestimated, the value of that accountability, because as a founder, nobody's keeping you in check on that, right? You can lie to yourself. Your ego can lie to you and say, well, something we need to do. So it's an exception. It's an exception we're going to have to make. But, everything's an exception. So when push comes to shove, do you have somebody tapping you on the shoulder and saying, hey, we can say yes to this, but what are you saying no to? And really getting you to answer that question. So that's in a nutshell what we do for clients in terms of the budget, and something that you can use. We just love doing it this way and grouping everything. And I would actually challenge you, ask your bookkeeper, ask your accountant to format your chart of accounts this way. Send them this episode. Let them know that you want to be grouping them in this way so you can measure these percentages. Even share with them your budget and say, I want to do a budget to actual with my actual QuickBooks, and I want to monitor this. Like, how do I do that? And if they're, I don't know, unwilling, incapable, or unable to help you in whatever way, hit us up. Let's do a power session and let's do that for you. We'll get you set up. We'll get the ball rolling on your profit plan for the year, and we'll get you a way to track it. No problem. So let me know if you need help with that. But I hope you found this episode helpful and can take this and take action with it as soon as possible. We realize that CFO services may not necessarily be accessible to everybody. And that's why we have packaged our CFO services into a power session for you. With this single purchase session, you'll be able to navigate the financial scorecard with me personally on your business and figure out what constraint you need to unlock next. We're going to give you direction, clarity, and we're going to find ways to increase your profitability, increase your cash flow, and make sure you never run out of money. Okay, if you're interested in booking a power session with me, I only do a couple per month, so make sure you jump on quickly and sign up. Check the link in the show notes for more information. I can't wait to see you in a power session.